Well, hello again, folks. Joe with you here. It's Market Roundup time. Let's do the 19th of February. We're moving on to a Wednesday. You guys know the drill. Let's get into the meaningful news of the day, see if there's anything we can take a look at technically, and share trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, folks, we had creepily basically the exact same day that we had yesterday. We'll have to check these numbers. On the daily news side, though, markets open lower and steadily move upward. We've seen a lot of this, gapping down, regaining the majority of the losses to close higher. We've seen a lot of this push-pull, but the overall motion has been bullish. The Qs and the S&P actually set a new highs today, which kind of caught me by surprise based on some of those percentages, how we closed. We'll get there in a second. So Fed remained steady with its course. No surprises in the minutes. I was kind of browsing around looking for some sort of a stimulant that could come. There was an acknowledgement of being able to adapt to policy changes with a new administration. So Powell did talk about that. But based on the course that we're seeing when it comes to the economy, nothing outside of on what they kind of been focusing on where they're at. And actually, I think that actually kind of had a pretty good impact on the markets as they continue to float higher into the close there. So the Fed remained steady. I know it was just the minutes, folks, and I might have made a bigger deal of it, but I was kind of worried that there'd be reaction. So how do we finish overall? Well, here it is. The Dow up 0.16, the S&P up 0.24, and the Qs up 0.07. And folks, checked yesterday. I think those are the exact same percentages as yesterday. I don't know. We'll have to see. The Russell down a little bit. Oil up and gold pretty much flat on the day. Let's get to the advanced decline line. 52% decline, 45% advancing, 63 above the 50-day moving average, and 37% below. So not a lot going on, but boy, we still have a very consistent bullish trend. There's just no way about this. It's just bull, bull, bull. It hasn't, I'm not seeing anything that's changed past that. So until that changes, guess what I'm staying, folks? Bull. Talked about this yesterday, since I was with you yesterday, saying if I see a little bit more continuation, I got to go from a +2, which is a little bit more reluctant than I want to be, to a +3. A lot of that has to do with the acceleration of the price action through the ascending triangle pattern. And folks, we got that. Whether you like it or not, that's where we're at. Take a look at the Qs. This one as well broke out above. Let me see if I can't get that line as tight as possible, but yep, there you go. There's your close. The same idea, this kind of ascending triangle pattern. It didn't really break out. It's not really surging out of any sort of resistance. And I'll say it again when I finish this video. This is some strange price action. Gap down, retrace to close flat or slightly higher. Gap up, trade down, close flat. These candles are kind of jumping everywhere more so than very definitive when it comes to, hey, let's start flat and go up or start flat and go down. There's a lot of gapping pre and post market. So the overall pattern is what we got to focus on, I guess. And there it is, guys. Very, very bullish on both of those. Taking a look at the heat map, it's pretty much the same. Stocks like PLTR are probably news driven. I believe there was a CEO thinking they're going to sell a bunch of his shares, but they're very specific to the stock, right? The overall is what we're trying to focus on. It makes it difficult to find the sector still. So we basically just got to take what we have and make the most of it. Here's the outlook that I have. I told you I was going to move this from a +2 to a +3 yesterday if I saw continuation of price action, and guess what I did? So I'm comfortably at the +3 side when it comes to the monthly outlook. Now, yeah, I want to go buy a bunch of bull trades, but in what sector? I still have a little bit of skepticism or unclarity when it comes to specific sectors. I'm still not going to be very active when it comes to putting or building a portfolio, but I'll throw a couple of darts when I see it. I'm keeping it at a +2 for the weekly outlook because the majority of the time when we get a breakout, we get consolidation or corrective action. But I have to say it is bullish. There's just no way around it. Let's get into the picks that I had from yesterday to today, right? So I took a look at a couple here. Here's CVS, Starbucks. I like them both on a chart. Starbucks is pretty good, kind of a high base. I'm going to show you CVS. But right along with healthcare, we got CI, which is a neutral. I haven't showed a neutral for a while. I figured I would if you guys are looking for something in that area. On the bottom there, consumer, Abercrombie and Fitch. We got Ball. It's just kind of what weak is weak, and they stay that way and strong. So let's get started with our first trade. This is CVS. I like CVS because it just kind of moved up higher and it stayed there. Outperforming, doing really well. Probably a really good earnings announcements there, but comfortably above a resistance that it had before that. Consolidating, I don't know if it's going to just mad dash out of here, folks. So diagonal spreads, targeted butterflies, credit spreads, something sideways, because we kind of have to wait for it to confirm to the upside versus anticipate. So if you're straight calls or stocks, it might take you a little while. But if you want to play something like in a range, maybe snap a Fibbo on air, I'm fine. Just to be clear, folks, I'm still not comfortable over 2 weeks at most. Let's get to the sideways side. Now, this is in healthcare, right? But I just got done telling you I don't know what sector is what, but I kind of like this. Now, we have a symmetrical triangle pattern being created here. Look at this crossover, the 20 and the 50. Well, the 20 just pushed right back above that 50. Usually these build strength and they'll break up or down in a direction. However, there can be times, well, especially with what we're seeing here, that they'll kind of meander up a little bit and then meander back down. So if you're looking shorter term for something that's going to continue to consolidate, now this isn't an easy one because it's a large price stock and it's got a large range here. I mean, but credit spreads slightly out of the money can do good if you want to have a slight bias to the up or downside. But just figured it'd be kind of a fun trade to look at when it comes to sideways. Let's get into my bear. This is Abercrombie and Fitch. Now, folks, this is at a low that it hasn't seen since February of 2024. I don't know if that makes a difference. To me, it doesn't. What I do like is this has never had a chance to come back. It didn't really do well. I mean, here's its earnings. It looks like it beat, and then for some reason, this thing has just been bleeding off. It's a pretty good rollover, and when this falls, it seems to fall pretty aggressively. Lots of gapping, larger candles. Looks like it's on its way down. See if it can maybe extend itself down to maybe a support level if you want to play maybe off of another one of these bounces before getting short, or if you want to play a credit spread sideways to slightly down. It's just out of favor. Very simple. I know nothing past that. I just like the chart, and it looks like it's a little bit more sustainable than some of the others out there. So, folks, you know how I roll. That's basically all I got. Real quick and short today like it was yesterday, but the S&P and the Q's break into new highs. That's a fact. It's strong. The economy is showing stability. The state of the U.S. is expansive, and we're spending, and we're doing great, and things are, they're where they're at. The Fed seems to be super comfortable with where it's at, acknowledging that, policy changes might push and pull some stuff, but we'll see what happens down the road. But when it comes to the U.S. as itself, it kind of justifies what we're seeing technically in the majors. Individual stocks can be a little bit more hazy, so just be a little bit cautious of that. Unemployment claims, manufacturing services, PMI, we got both those coming up. I don't think that's going to have too much of an impact unless we get something out of left field, folks. I imagine we just kind of have a sideways choppy days that just maybe float a little higher would be my bias. Now, we got earnings season, Walmart, Baba, Southern Company, they're coming out tomorrow. I think Carvana just came out. It's down a little bit now. I don't have the numbers. So they're still going on. So it's just kind of that market in front of us. We always talk about it. So we've got to trade it. If we don't like it, we don't have to trade it. But until then, until it gets to the market you like, just be cautious, stay small, and make sure you're following your plan. All right, guys, that's all I got. Thank you so much. We'll talk to you next time. Bye, everybody.